This is what a completed wheel trade looks like. One stock, in this case SOFI, taken through a full cycle. I sold the put, I rolled it, I got assigned, collected the dividend, sold a covered call, and the shares were called away. Total realized profit, $355.50. A 2.37% return on capital in 130 days. And every number you're looking at was calculated automatically. Let me show you how. This is the Trading Options Cashflow Wheel Strategy Spreadsheet, version 2026. It is built to track one thing really well, the wheel. One stock per tap, from the first dollar of capital you reserve to the moment the shares are called away. It tracks your cash, your premiums, your cost basis, your realized and unrealized profit, and your return on capital. It tells you which phase of the wheel you're in and what to do next. Without a tool like this, you're collecting premium but trading blind. This tool gives you a number-based compass. The setup takes a minute. The spreadsheet comes with one master template tab. You never type into the template itself. You just duplicate it, once per stock. Right-click the template tab, duplicate it, and rename the copy to your ticker. Then type the ticker in cell D3. In Google Sheets, the company name and live price pull in automatically through Google Finance. In Excel, you can link live prices with a Microsoft 365 subscription, or just type the price into the yellow cell. That always works. Everything at the top is a dashboard, and it's fully automatic. You never type here. It shows the phase you're in, what's open, and what your next action is. There is an alert banner that turns red when something needs attention. Below that, you can see your cash balance, the collateral reserved for open puts, your free cash, the shares you're holding, realized and unrealized profit, and your return on capital. And of course too, your cost basis per share. As we enter each trade, you can watch these fields update automatically. Step 1. Reserve your capital. Before selling anything, I log the cash I'm dedicating to this stock. I'll use $15,000 in this example. I add a row and I choose Deposit Cash. I enter the date and I enter the amount. The dashboard now reads cash reserved $15,000. Step 2. Sell the put. SOFI is trading around $13.20 at the moment. I sell a cash secured put well below that at a $10 strike, collecting 82 cents of premium with 67 days to expiration. I start the row by choosing the action, sell to open, then the strategy, the strike, the premium, and the expiration date. The sheet colors the fields automatically. I still need to fill in into a red color. And notice the dashboard. It has reserved $1,000 of collateral for that put and tells me that I have an open position. Step 3. Rolling a put. By mid-February, SOFI has rallied to $13.85, so I roll the put up to a higher strike to collect more premium. A roll is always 2 rows in the spreadsheet. I close the original put and I mark it as rolled, and then I open a new row at the 10.50 strike. The new row carries the combined premium. This means my original credit minus what it costs to buy back the first put plus the new credit received. This makes $1.35 in total. A roll should always bring a net credit, otherwise it's not worth doing. At expiry date in March, SOFI has pulled back to 10.20, below my 10.50 strike, so the put is assigned. I complete the closing fields and mark it as assigned. All that premium is now realized profit. Step 5. I record the shares. This is the mistake I see most. When you're assigned, you buy the shares at the put strike and not at the market price. So I enter the buy shares row at 10.50, 100 shares. And I watch also the cost basis. It's already well below the strike because the sheet has subtracted every premium I've collected so far. Step 6. SOFI pays a dividend. I log it as $18. Small, but it matters. The sheet adds it to my cash and lowers also the cost basis a little further. Every dividend makes the position stronger. Step 7. Now I own shares, so I sell a covered call. SOFI has recovered to 10.80. I sell a call at the $12 strike, comfortably above my cost basis, for 68 cents, 40 days out. The rule here: always sell the call above your cost basis, so if the shares are called away, you lock in a profit. The sheet shows my cost basis dropping again with the new premium. And finally, step 8. The call is assigned. In May, SOFI is at $12.35, above my $12 call, so the shares are called away. This is 2 entries into the spreadsheet. I mark the covered call as assigned, and I close the shares row as sold to close at the $12 strike. And there it is. The dashboard flips to wheel completed. All my capital is free again and ready for the next cycle. And here is the part I love. My shares were assigned at 10.50, but by the time they were called away, my cost basis was 8.38. Because every put premium, every roll, the dividend and the covered call all came off it. That gap is the whole point of the wheel, and this sheet tracks it for you on every single trade. And that's the full wheel cycle from capital reservation to completion, tracked, calculated automatically. The spreadsheet handled Google Sheets and Excel. Both versions are included into the package. You also get the complete user guides and tutorial videos walking through every field. If you want to stop guessing and start seeing your real wheel results, the link to the spreadsheet is in the description. And if you have questions, come join the community on Discord or Patreon. I share my live trades there every week. If this video was useful, please hit like and subscribe. It genuinely helps more traders find it. I'll see you in the next one.